Well, today we're here with Todd Binkley with Gateway Mortgage. How are you doing today, Todd?
Doing great, doing great. It's good to be here on a Monday and hopefully teach everybody a little bit about what is happening in the mortgage market.
Awesome. Well, as we know, mortgage rates are moving up. They've moved up. Likely to continue to move a little higher throughout the 2022. What would you say, though, as far as do you think the worst is behind us or is the worst to come?
Wish we all had that crystal ball, of course, but all the economists weren't expecting rates to be as high as they are. So in our history, we've seen rates go up the highest in the last 1 year time period than they have in the recent time period. So what's nice, though, is the Fed, in meeting last week, started raising short-term rates, which is scary on the news because all everyone hears is rates are going up by another 0.5%. But when the Fed raises short-term rates to control inflation, that actually helps us. So they're trying to control the economy and take a little bit of money out of the economy. And what that actually does is help long-term rates. So we actually saw rates plateau this week. And we might actually see a little bit of improvement, although they think we're going to stay pretty steady here, maybe go up just a little bit more before the end of summer.
So would you say then this slide is kind of points that out. So much of the increase we've seen is anticipation of what's going to happen later in the year.
I think we've seen the worst.
And we think things are going to kind of flatten out then and be a little bit better.
We think they've started flattening. The Fed's going to meet again, and they're expected to raise short-term rates again by another 0.5%. And I think once they do that, we'll see rates actually moderate again, maybe even start to see a dip. But in the short term, you might see the rates go up just a little bit more.
Okay. Sounds great. So let me ask you this, and from what we, the people we follow in the business, the numbers they've gone back and done analysis on home prices when there's been periods of mortgage rates that increase greater than 1%. You can see here, home prices by their what they've researched, by their research, have not fallen during those periods. In fact, they've increased. So, do you have anything to add to that, or what do you think about it?
Well, what you normally see, and I've been in the mortgage industry 28 years now, and so we kind of lived through the early 90s, the 2007-2008 crash, which we'll cover a little bit later when talking about the housing bubble. But we've seen rates go up over 2 percentage points since about March of 2021 to April of 2022. And we've actually seen more sales, and the sales go up and the appreciation go up, because when rates go up at that percentage and there's still a lot of demand, you start seeing a lot of people get off the fence and decide, is now the right time to buy? Can rates be worse next year? So when evaluating the best needs for the consumer, the buyer, and the seller, it's, do we think rates are going to be higher next year? Do we think the home value is going to be higher next year? And those are different things that kind of drive people to get off the fence, go ahead and move before rates get worse.
Right. And also, so you have two sides. You have obviously the number of sales, and you have the values, which we just spoke to. But in the number of sales, it might be impacted a little bit, would you say, by people who now cannot afford to buy and things like that, or?
Well, we've seen that because a lot of people, especially that we started doing loans for in November, came back to us in February because they wanted to wait for the market to settle. And all of a sudden, home prices, especially south of Beltway 8, had gone up anywhere between 10 and 20% in that short little time period. And so what ended up happening is the rates went up, the home values went up, and some people that were looking at, say, a $300,000 house could now only afford a $240,000 house. And of course, with inventory shrinking, they were not able to find anything in that 240 price range, but yet we just couldn't get them qualified up to 300,000.
Gotcha. But overall, long-term housing, you should buy housing for a long-term appreciation. Would you agree with that?
Every decision that you make having to do with real estate shouldn't be, where do we think values are going to be in 6 or 12 months? That's very short term. We know real estate is the best investment over time. It's proven itself that way time and time again, and especially with the appreciation that we've seen in values from like 2006 all the way to 2021. And what's weird is Texas has really enjoyed a lot of appreciation, and it made home buying probably one of the best investments, not just for the short term, but again for the long term. 80% of all millionaires did their wealth through real estate somehow or another. So again, being able to invest in real estate is going to be still the best long-term investment you're looking at.
Much better than the stock market.
Today.
Especially today, right?
Yeah.
So yeah, overall, I mean, you can see by this slide, home prices, except for 2007, 8, 9, since World War II, have basically had a steady increase.
Well, that 06 or 07, 08, 09 was a really unique time period, because the reason for that housing bubble, and we still get asked about that every single day for someone that's buying, is, do you think the values are going to go down next year? And they always talk about the housing bubbles. But what happened in 07, 08, 09 was it wasn't a lack of inventory really driving that. It was we had made so many loans as a mortgage industry in the early 2000s that people were no longer able to pay on an arm that just adjusted. They had gotten into the property with no down payment. We basically were doing 80-20 loans all the way down to 580 credit scores. So all of it was a combination of all that happening, and then property values plateauing, and all of a sudden someone's house payment on a 2-year arm went from $1,400 to $2,800, and they could no longer afford that mortgage. And we just need to be careful with all the changes going on in the marketplace that we don't fall back and go to those easy loans, because ARM products are now up at their highest level in 14 years because everyone's trying to chase that interest rate so they can afford a little bit more house.
So the past 5-6 years, we haven't really seen any of those risky loans.
The risky loans have been taken out and will continue to really not exist on a large scale level, because there were laws that were passed in Congress that now require a lender to have the ability to repay. So if we can't document that the borrower has the ability to repay a loan on the short term or a long term, then that falls back on the lender. So the laws that have been put into effect on those really risky loans, a lot of that's been taken out so that hopefully we won't run into that problem again.
Hopefully we won't go back there.
Yes, sir.
Prices have increased. Home values have just continued to go up. Still expecting to see that in 2022, according to the forecast we're seeing. So from a high of Fannie Mae's at 10.8%, to the Mortgage Bankers Association saying 6%. Average of those, they're looking at 9% still for 2022. Those aren't really numbers that are going to be continued to keep moving forward. Do you feel like?
Well, it's not sustainable in most areas. And again, these are numbers that are nationwide. Specific to us here in Houston, and especially south of the Beltway, we've seen home prices appreciate at ridiculous numbers. And that's not sustainable over time, nor should you make decisions based on what happened over the last 6 or 12 months, but take out a further time period in order to average what you're going to make. But even in our area, with all the job growth that's going on, Ellington has now been approved to be a spaceport. You've got the Port of Houston that's adding jobs. You've got the little mini medical center that's off of 646 and 45. All those are driving jobs into our area, and jobs means people. People need places to live. And with everything changing during the pandemic and people wanting to live closer to home or closer to work, our homes, we can't build homes fast enough. And you draw that with the paradigm that home builders can't finish homes as quickly because they can't get the materials they need because of the supply chain issues. So we're going to see appreciation in our area for a solid 3 to 5 years.
So obviously none of us have a crystal ball, but would you say our numbers might, these are national numbers, would you say our numbers might over the next 5 years or so exceed these appreciation amounts?
I would think with the job growth going on, we have Texas and especially the Houston area is one of the #1 areas in the country people are moving. So again, people means they need a place to live, which means our appreciation is probably going to be higher than the national average. I would almost say assuredly going to be higher than that. But again, when you're factoring whether to buy a house and whether it's going to be a good investment, Don't look at what's going to happen in a year. Look what's going to happen over a longer time period, because that's where the true investment of real estate happens.
So even if it's a 5-year time period, based on this and based on what is being projected nationally, and hopefully our numbers are going to exceed those. Like I said, nobody has a crystal ball, but hopefully our numbers will exceed those. If somebody bought a home for $360,000 in this year, 2022, by 2027, using those numbers, they would that home would be valued at $456,000, which is $96,000 increase in value in 5 years. That's almost $20,000 a year.
That's fantastic, and that's why a lot of CPAs and financial advisors will tell you, buy the most expensive home you can afford, because again, over time, if you took a house that's $500,000, then again, you're just looking at numbers probably getting closer to $700,000, which is $200,000 in additional equity that you have in your property. So again, when someone's calling and asking, is today the right time to buy? Should I wait? What are rates going to do? We always want to, of course, answer those questions honestly, what we truly think what's going to happen. But again, you're looking at time. Don't make a decision based on what you think things are going to be in a year. Look at them based on what's going to happen over the next 5, 7, 10 years, because that's where you really get the major part of your investment. But more importantly, if we all had the ability of hindsight, you have people that, especially south of the Beltway, where you had average appreciation of around 15%, people who waited from January of 2021 to 2022, they basically lost 15% in equity that they would have earned. And there are some areas, Rocheron and Manville area, those were over 20%.
Wow.
So the numbers are staggering, but again, it's always a great time to buy a house.
So those are some national numbers and information. Real quick, some more local. This is for the whole Houston Association of Realtors, MLS. Now we're gonna, in the next weeks coming up, we're gonna break these down a little bit more locally. So stay tuned. We'll get back to you on that. But for the first 3 months of 2021 versus 2022, 2022's been stronger every month except in sold units. Except it did drop off a little bit of April. We talked a little bit about that. I mean, what do you feel like that may have been attributed to, the drop off in April?
Well, there are a couple of things attributed to that is what we're thinking. But number one is lack of inventory. I mean, there are plenty of buyers out there. I mean, we're out of the Gateway Friendswood branch, and we have over 40 buyers already approved, just waiting for inventory to come on. Fortunately, I think with agents educating the public, using social media, mail outs, you're seeing it on the news, encouraging sellers to get their house on the market. Well, I think we're seeing that now, so we'll probably see an uptick. But again, number one thing that we're going to see is, although the inventory and sales have been about steady, you still saw prices go up about 16% in the Houston area. So again, year over year, on a $100,000 loan, or home, that would have been appreciation of $16,000. Now just multiply that times the price of the homes now. And again, looking at home buying as your better investment.
I mean, you can look at it right here. Obviously, I think these numbers, I don't know the percentage, this doesn't break it down, but it sounds like those percentages are right on. Because in April of 2021, average sales price, and these are single family homes in Houston, all of Houston MLS that sold was $371,000 roughly, and 2022, $426,000. So those percentages sound like they're about right on. Like I said, they just continue to rise in value. The number of active listings, speaking of what you said as well, I think a few more people are putting those in the market, so we should see May's number. It'd be interesting to see. I think we're going to see May's numbers come up because in 2021 there were 13,400 active listings, and in 2022 there's a few more, about 14,000. So we should see those sales numbers come up a little bit in May. So it'll be interesting to see how that works out. Average days in the market. Obviously, like you said, I mean, there's still a lot of buyers out there. They've actually dropped continue to drop. Last year they were 35 in April. Average days in the market for listings this year down to 29. Those numbers have continued to drop throughout the first of the year as well. But the month supply, because of those new listings, has come up just a little bit to 2.1 this year in April over last year at April of 2.0.
And those are still historically low.
Very, very low. 6 month supply is considered a balanced market, as most of us know. So 2.1 months on the supply is very, very low. So all in all, just sum the market up from your perspective.
So I think we've kind of plateaued. You saw the government step in, do kind of what needed to be done. The mortgage industry wishes they would have done it a little earlier, but it is what it is. So fortunately, the Fed has stepped in, started making their changes. But what's more important is almost every day, one of the Fed chairmen are out talking. And so now they're trying to drive the market based on what they're telling people that they're going to do. So they've reassured everyone that inflation is the number one priority, because the inflation is what hurts fixed rate investments, which is what bonds and treasuries are. So when they had to push the price of the bonds and treasuries, that made interest rates go up. So now that everyone's kind of been calm and saw that the Fed is getting more serious on this, we saw a little plateau. We saw a touch of improvement this week. So if they come out again with another 0.5 point hike, that's actually going to be good for long-term rates. We should actually see the market go down a little bit and hopefully bring more people into the marketplace. We continue to get listings to go up. But again, when you want your opinion on what's going on in the marketplace, what's going on with rates, call John to talk about what's going on in the market. Call me to go through anything on rates and loan-wise. We're here for you. We bring 28 years experience.
Yeah, at least.
And at least.
I wouldn't even say.
Don't want to give his age away, but.
Mine's a little bit more than that, but not much. But
all that will be working for everyone. And anyway, I think it's going to be a great summer.
Awesome. Thanks so much, Todd. And stay tuned right here. We're going to break down some of these more local markets in the next few weeks. Take care.
Bye.